What's up, guys? Welcome back to another episode of Behind the Facade. I'm your host, Gavin J. Gallagher, and on this podcast, I explore the mental and emotional game often playing out subconsciously in your mind and the mind of everyone else in the real estate or property investment market. The key to success in this game is to master your mindset, your behavior, to take control of your thoughts, your emotions, and most importantly, your ego. So here we are on episode 67. Last week I was covering risk mitigation in property investment, and on this week's show I'm going to be speaking with my guest Robert Colleran. Now we're going to go and talk a lot of shop today, a lot of terminology, real estate stuff. Robert has been a real estate agent in the Irish market for over 20 years and has a massive wealth of knowledge. He's been involved in multiple firms, large and small, largest firm being CBRE, but he also spent a couple of years working for the largest developer in the state at the time, and that was Liam Carroll. Now, if ever you wanted to know why risk mitigation in property investment is a critical skill to master, then the story of Liam Carroll before and after the 2008 global financial crisis should be all the explanation that you'll ever need. It was terrible to see how somebody who spent years building this incredibly large portfolio could crash and burn and end up like literally with nothing. So Robert has seen it all. He has enjoyed rapid market growth and he has seen massive market falls, and he's survived it all to tell the tale. So I've asked him to come on today and we're going to cover a number of things. He refers to a couple of different sites and stuff which I have listed in the show notes, podcasts and the like. And I would strongly suggest that you stay to the end of the interview because he has some advice on how to improve your property values, a couple of tips and strategies, along with some of the core traits that he saw in his most successful clients. So whether you're from the Irish market or not, I think you'll find this one an interesting podcast to listen in. So without further ado, my conversation with Robert Colleran.
Yeah. All right, Robert Colleran, how are you? Welcome to the podcast.
Yeah, great, Gavin. Yeah, good. Long time fan of the show. So yeah, love it.
Well, it's great to have you on, and we're going to get into a lot of different things. We're going to be talking about commercial property, and we're going to
perfect.
Development land, and lots of different things. But before we kick off all that kind of stuff, as I ask all my guests, can you give us just a little bit of a backstory? What took you into the property sector from being a young lad, kind of deciding to get?
Yeah, no, that's no problem at all. I suppose I was always interested in it, but I was a bit like yourself, wanted to be an architect, always into building, and then it was probably that kind of design-led arty, and then it was kind of just building. And I suppose my dad probably had a big influence there. Just kind of growing up, building a summer house. That was a good project. Or buying a house off market in Blackrock, in Waltham Terrace. Like he bought that himself off market. Just kind of interested in property, and then that kind of grew. So like, the family would have been banking, and then I was kind of the only ones got involved in property. Friends of mine, 2 or 3 friends, their parents were architects, so I was involved in that side of things. And then, my dad probably pushed me into the course when we were weighing up things. I kind of, I weighed it up, went for the course, and then, right from day one, I was always kind of working on building sites during the summertime, and I would have worked for Dwyer Nolan 2 summers in a row, and then Marion Interiors, Landscape Garden. So when you're through college, like the summertime was great. You get the good side of a building site where you're outdoors most of the time. But that was basically it. So always been involved since college, I suppose.
Yeah, it's an interesting industry, all right. Yeah, a lot of people ask, kind of what should they do, what should they study and stuff. And
I think it's
avenues into it, isn't there?
Yeah, there's a good business. Like I've guys, like friends of mine that are in the banking side, they went into property and then they kind of ended up in banking, or they could be, insure, they could be, I suppose, investment side of things, or it could even be pension funds. So there's all different sides to it. I suppose sometimes I go in and I talk to class, like I go back and I do a bit of I suppose career guidance for different students in my old school, and I kind of go back in, and guys are looking at CAO, and they're looking at different options, and I'm saying, well, look, generally the property degree, it's a good business degree generally, and then it has the bolt-ons. So you're doing economics, you're doing law, you're doing accountancy.
It's an all-rounder.
Yeah, so it's a good business, and then in addition to that, you're doing construction valuations, advanced evaluations, and then you're doing, advanced maths. So it's a good business degree anyway, and you can decide where you want to take it. So you can go into one of the bigger houses, one of the agencies, and then you can decide what you do. You can decide whether you want to go in the valuation side of it, or do you want to go in the agency side of it. So.
Yeah. Well, we're going to get into some of that today.
Yeah.
I mean, you own your own firm. You've got a commercial agency business, and you do land development or development land, I should say.
Yeah.
In terms of, but I wanted to turn back the clock, and specifically, I want to go back to 2005 when you started working for Daninger. And
that's right. Yeah.
Liam, the poor old late Liam Carroll, and to those listeners who don't know who Liam Carroll was, I mean, he was a legend in the Irish property sector. He built thousands of apartments in the city centre in Dublin. It was an absolutely massive business, but amazingly, the guy had kind of this no frills attitude. He didn't kind of spend money on cars and all that kind of stuff. Certainly, that was the impression that I got. But you worked for the man. What it was like to work for Liam Carroll?
Yeah, no, it was great. He had a good sense of humour, tough but fair. Like I prior to working for Liam Carroll, I kind of worked independently for him as an agent. So, when I started out, it was probably 99, and then I was doing a lot of Liam's kind of commercial stock. He started going more into retail, more into office, and then gradually I started doing more and more deals for him. Then I got headhunted, went to CBRE for about 4 years. I think it was about 4 years anyway. And then at one stage we did, I think it was 28% of the overall office lettings in the Irish market.
27.
Yeah.
One guy controlling 27% of the Irish market.
Yeah, so and then in terms of land banking, huge.
Thousands of acres all over the place.
Yeah, I wouldn't say thousands, but we had 54 acres north docks, 22 south docks, Tala, Cherrywood. So yeah, it was a lot of property, but a lot of it would have traded on, would have sold on. So.
Yeah.
Cherrywood would have traded hands. Yeah.
In terms of the lessons that you took away from that stint there, I mean, working for a guy like that, what would you say? Is there anything that stands out as particular, lessons that you?
I'd say protect yourself and stick to what you know. What brought Liam Carroll down was shares.
So, he went into stock market.
ICG, Greencore, various shares. So he would have spent maybe about $1 billion on shares. I don't know the full amount, but he got heavily involved in shares to try and diversify, and then a lot of the shares would have been property linked. So that probably brought him down. If he didn't touch the shares, he probably would have been fine, because his model was very competitive in terms of he was able, he had everything in house. So you would have had. You were outsourced to Trainer Tool or Amani Pike or Top Architects, but then you would have had all your in-house architects, architectural technicians, everybody. We had 260 staff in the office. We had 600 out in site. We had 48 sites on the go. It was a machine.
It was a machine, yeah, for sure. And was there any behaviors or habits that the guy had that you think contributed to his early success?
I just think it was hard graft work, bit of risk taking, but generally speaking, it was kind of hard graft, and then it was good leadership.
Yeah. It's
people followed him.
Mm-hmm.
People would have followed him, but he was quite visionary. If you look at placemaking now, Liam's, I know people don't look at it, but I'd say 17 years ago, he was getting Gale architects involved. So. Even later on, we were looking at Cherrywood, we hired David Sims, Gale Architects, all about placemaking, all about what's coming in vogue now, walkways, pinch points that people want to hang out in. We were trying to do that to Millennium Walkway. We're trying to add value. Bloomfield Shopping Centre, we wanted to glaze over it and create an inside-outside space. Tala, we were trying to glaze over that, put windbreakers in. So it was all trying to create areas that people wanted to hang around in. So that was kind of vision. And then other things that were there was, he was always trying to add value to properties already. So when we left the Google block, they were all, the structure was all there to add onto it. So originally it would have been 260,000 square foot. And then he added an extra 30,000 square foot later on to the roof plate. So you Google staff walking around wondering, what are all these structures on the roof? Like, it was like a wedding tier cake, and all the beams were literally there to go to build up again. So yeah, it was add value. Okay, in terms of earlier apartments might have been cheap, but if you look at the Gasometer, Millennium Tower, Charlotte Quay, there's quite a few developments. Resi developments are good, but it depends on the time, Gavin. Like at the time, you could buy an apartment in Smithfield for €50,000 on a 10-year tax incentive. He was able to churn and to build at a certain rate. Okay, some of the early apartments is quite a long corridors, but look, at the same time, a lot of the a lot of the apartments hold up today. And then as you go, if people want to pay more, they get a better product. Like if you want to have, State Street Bank as a tenant, you'll have geothermal heating, you'll have eco cement, you'll have an excellent rating of a building. So, if you want the best, you build the best. If the rents are high, you go for that rent. So if it's going to be a building of €60 a square foot, you can
afford that. Yeah.
So yeah, we were able to go to Facebook. Like I remember when Facebook were going over to Dublin at the start, we were able to go over, go into the IDA, meet them directly, say, look, these are all the sites we have. It gives us a wish list of what you want, and we can provide it. And I suppose that was the thing. It was a case that you could say, you could actually rentalize the fit out, tie it in with a Euribor rate over 5 years and spread it out. But at the time, that was at a time when you had 5-year rent reviews. So, your base rent might have been X, but by tying in the fit out at cost price to the tenant, you were able to fit out the cost, balance it out over 5 years, and it proved very attractive for the likes of Google, State Street, Dell, a lot of these big multinationals, but also a lot of the OPW tenants. You were able to give them second tier offices, which are Dublin centric, which are kind of, you might have been Dublin city centre, but you might have been Dublin 1. Slightly off pitch. You're not your prime Dublin 2 or 4, but at the same time, your rents are mid-30s. You can have it all bells and whistles, and depending on your fit out, we can rentalise that. So that would have been a lot of cases there.
Interesting.
So yeah, probably a bit of a visionary. Would have bought, like, key things when you look back at is buying land banking in around transport hubs. So if you look at Cherrywood, you look at Tala, you look at Clongriffin, you look at areas where, where's the next metro line going, what areas are next, but buying into areas that underdeveloped, like Smithfield, like in the 90s, you probably wouldn't walk down there at night time.
Yeah, I remember that.
That kind of Capel Street, Abbey Street area, like there's 1 million square foot of office space there and you don't even notice it. The amount of apartments there would have been 10,000 apartments between there and Smithfield. So yeah, it's a big builder, but it nearly got too big to manage it. And then it was a case that I think you're never too big to fall, and I think maybe he thought it might have been too big to be taken in, and then they invented NAMA, and then he was the first one into NAMA. So
yeah, but I know it's a terrible shame what happened to him, because it had a big impact on his health and all that afterwards as well.
Yeah, well, he had an underlying condition, he had MS, but I had to do an affidavit in court and write in the business plan. I had to write in all the assets, all the land bank, all the properties that we had, and could have traded through it, but I think ACC would have jumped ahead and and look for the full loan back. So that's what kind of broke it. But interesting times, you know.
Wow. Yeah. Well, a real baptism for you, kind of in your career path, you know, to learn.
Yeah. And look, it was great. You know, look, Liam was good to me over the years, and he's good to a lot of people. There's a lot of people whose businesses stayed alive because of Liam. When he went up, he would have paid people. Like, he would have paid firms of architects. Some got 100%,
Wow.
70. Others got 60.
Not everyone got that. No. Yeah.
No, I don't think so. Like, there was guys.
I know of a number of firms that went well up, and they would have repaid directors' loans and things like that before they paid suppliers. So yeah, very fair. Thanks for going into that, Robert. I wanted to move forward a little bit to you had a couple of different stints in different firms, and you mentioned CBRE, which is obviously a major kind of global firm and stuff, but you also worked in smaller firms as well, Dublin-based firms and stuff.
Yeah, I started out in Drucker Fanning and Partners. So I suppose Drucker's it's not there anymore, but it would have amalgamated into Bannon. So Erwin Drucker would have been head advisor to Dunn Stores. So then we would have run all Dunn Stores. Erwin has a huge portfolio of properties in around Dublin, retail, high street. So it would have been a lot of retail, and then, you know, office gradually took over. So would have started out doing a mix. So it would have been, you know, mainly agency under Neil Love, was the guy that I started with. So I worked there for 5 years, then got headhunted to CBRE. And then when you go into a larger firm, you get put into one section. So then I went into the offices department, worked for Willie Dowling for probably 4 years until I got offered a deal I couldn't refuse.
And that was with Daninger.
And I was going in to work for it was Daninger, Royston, Dunlow. So they were the big companies. So it was mainly involved in the letting of Liam's land bank, which was all office and retail.
For people that are listening that are, say, younger people, and they're thinking about, you know, a career path and stuff, looking back on your career, would you say you learned more in the big CBRE type firm or in the smaller firms?
No, I'd recommend to somebody younger. You can either go in, like the way it's run now, it's different from when I started off. So the way it's done now, you can go into a big firm, and what you do is you do 6 months in valuations, 6 months in agency, and you could be 6 months in property management. Whereas when I started, you know, I decided to go into a smaller firm where I get much more experience, and there's probably a chance to maybe move up the ladder a bit more. But generally, it's well balanced now. But what would happen is if you go into the likes of a CBRE or Savills, they rotate you. Whereas maybe back when I was there, you know, late 90s, they mightn't have done the same. But a smaller firm, you can get, you'll have broader experience. You're a bit of everything, but it stands to you. You kind of pick up things. I think when you go into CBRE or somewhere else later on, you find your niche, and then you can be an office agency expert or a retail expert.
You niche down.
Yeah, like you might like when I was in CBRE, I was office, and then it's a situation where Kelly Walsh set up and the two industrial guys left. So then I had plenty of experience doing industrial before, so I went in to help Garrett McLean because he was short staffed. But that was just a period until he got going again. But being able to do that, it all stands to you these days. So generally speaking, of a broad experience of agency, you know, and then I kind of would have worked in Allsop Private Treaty, which is now QRE. So I would have gone into investment. So it would have been, I suppose, if you look at it, general agency, office, then working for a developer, where you're working with about 11 different agents trying to get properties let. And then saying when the crash happened, it was a bit like yourself. You're sitting at your desk and you get a call into the office. There's 260 staff. I think they brought it down to 26, and the banks moved in and let go. So I brokered a deal with Liam before to stay on for 5 years, but that wasn't part of the plan. But
the new owners decided otherwise.
Yeah, I basically was called in March, and you normally have a bit of an arm wrestle over a commission. So I decided to forgo my commission and stay on working long term. But nobody knew this is March 2008. Nobody knew the level of recession that happened at the time.
Yeah. So it was all a big surprise to us all.
It was a big surprise. So it kind of swept the legs from under, Liam. So unfortunately, what I would suggest to people is make sure you have structures in place where you have a fallback on. Whereas you could be 3 billion worth, and then to find out that your assets are all taken away from you. Okay.
Yeah. That's the advice I've been giving a couple of people.
That's it. Yeah.
if you build it on like a house of cards, and then
you don't have a cross.
Yeah,
it could be a cross guarantee, or you could borrow off it. So, your loan on an extra push would have brought you down. But like prior to that, Liam would have had, I don't know, he would have had a float of 500 million in the bank that he could have bought properties with, and then overextended. But it got to that stage where you probably got too cocky, and you thought that you could be too big. But at the same time, he never overpaid for sites. The biggest, I suppose, talent he had was trying to secure off market. The amount of people I still meet that say they should have sold to him back in the day, to regret it.
But like, it's amazing. If you look at that period of time, I mean, Liam wasn't the only one who got the legs taken out from under him. I mean, all of the giants of the kind of Irish market were all kind of taken down, and that there was Bernie McNamara, there was Derek Quinlan, there was Paddy Shovlin.
Yeah.
All of those guys that were flying around in helicopters, and they were they were living it large. They all got taken down by this, overextending themselves effectively. And,
I actually worked for quite a few of them after that. So when Liam went, I went to set up consultancy business, the same as I did now. And at the time, it was actually a friend of mine from football, was an estate agent, Vincent Finnegan, and I just put it out in social media that I was setting up, Robert Colleran Property Consultants Limited or whatever, and he said, "Look, come in and have a chat. I always wanted to get into commercial. You've the contacts, and we'll hit the ground running." So I literally finished up. I went working for a company called Speco or Spectra. They would have done all the cameras, and now they do all the speed cameras. So would have been Xavier McAuliffe. So I did about 2 months in there, and it was a bit like Shawshank, where the guy's sitting in a warehouse, and people are coming in asking for property advice. It was pretty funny at the time. But I did that. Went into Vinnie Finnegan's, and then straight away had Liam's portfolio, which he had control of. And then I would have worked for done other work for Landmark Developments. So I would have had all Beacon Court, Treasury Holdings. I would have done Smithfield, Ballymun, Spencer Dock for Treasury. And then I was given Smithfield it was Paddy Kelly's Red Quartz. So a lot of these developers that got into trouble, I was still dealing with the assets. So it was just trade. It was hard slog, rentals only, and it was just churn. It was kind of going for a market below where the bigger agents would go. Spread whether 30, 40, 60,000 rent per annum lets, and at one stage we even did shorter term lets where it was uncertain, where we could do 2 or 3 year lets, and then you'd review it and then you go again. But it started the market. And
that was the thing, that you were in that kind of completely uncertain place where the market had crashed down to nobody knew what the market rate was, so you just had to do whatever it took to kind of get it going again, isn't that?
Yeah, it kind of had the bottom level rents. Okay, rents were down a bit, but it recorrected itself, and then I got headhunted for Allsop to go in and set up a private treaty wing. So the idea behind it was that to improve the assets So it would have brought up assets to, 6, 8, 9, 10 million. Whereas beforehand, a lot of the Allsop stock would have been lower value, and it would have gone straight into auction. Whereas I'd go in, assess the asset, find out all the information, and then when I bring it to market, I'd outline where the issues are, how to fix them, how to enhance the asset, and then I'd either get it agreed within a month and a half and sold, or if I don't sell it within that time frame, at least I have all the due diligence done and I have all the, I suppose, the information to hand that we can sell it. So it's kind of teeing it up. So we ran this thing called Private Treaty to auction. So I worked there for about 2 years as director of Private Treaty. And then it was a case where, it was a bit frustrating because it ran too well. And then, you could have done 90% of the work and then it goes into auction and you get 20% of the fee. So
okay, yeah,
that was a bit frustrating. And then I went back in, I was talking to Willie Dowling, he brought me back into CBRE, and then I worked as the director in development land there for 3.5 years. It was a great experience, but each time you're adding, when I worked in Allsop, you're adding experience more in the investment side of things. And then it was like at the end of it was interesting to see the prop tech side of things and how they're planning, how we were trying to get that going right from the start. So worked with some great people in there, like Rob Hoban, and set up. You've Rob with Offer now. You've Richard. You've a few guys, quite a good few guys who moved on from there. And then
I was going to ask you. I mean, you've with all that advice, all the different firms, you decided to make the jump to start your own one, and tell us what it looked like. The 6 months before that, were you kind of planning setting up your own firm and getting things in place, or did it happen last?
No, I kind of done it before. So I set up Vincent Finnegan before commercial, but that was for somebody else. And then I was offered kind of a good deal to keep it there. And then when I set up Allsop Private Treaty, it was myself and Brian Gary kind of set that up and grew that. Okay, with the benefit of we could go over to the London head office. So over in the UK, Allsop is just seen as Savills. It's just professional across the board. Their Private Treaty section, it's just professional. Whereas here, it kind of got tarred with the wrong brush. So hence the rebrand, because sometimes you go putting in an expensive asset and Allsop for 6.5 million, and people are thinking there's something wrong with it. Whereas
why would it be in Allsop?
Yeah, exactly. So it just I think at the timing of Allsop's when it was set up, it kind of started off a bottom and a lot of receivership sales. But that changed over time. But it's still, in Ireland, it never escaped from that. So hence
the perception,
perception was there. So hence
it just shows you how important the brand. I
think so. Yeah. Because I even I think I had a row with Stephen at one stage. I said, "Could we just sell this under a different brand?" And it was the case that, look, if they don't like it, they can lump it. But things change and people learn and things move on.
Yeah. And just from the point of view of you moved, started your own firm. I mean, that period when what advice would you give to people that are thinking about doing that kind of?
It was hard to take the leap. Yeah, it was hard to take the leap because you have a level of security there,
salary, all that stuff.
You have a good steady basic, but at the same time, it's kind of like a rising tide. When things are good, you can make a lot of money. But the problem is if the development land market drops or bottoms or tanks and there's no sales and you're not involved in property management or valuations, you could be sitting at your desk and get a call into the office saying thanks very much, but you're only on a rolling 12-month contract. So get the experience and use it. But for me, it was kind of time that I said, look, I'm part fee, part wage, part bone, part commission. So you're kind of working, you're nearly on a structure where you're working for the commission. Your basic covers your costs, and then the rest is the add-on. So for me, it was a case that with your contacts that you've established after, 17, 18 years, you nearly have that core where people go looking for you to do business. And if your name is strong enough, like if you hire somebody in any of the big firms, you're hiring the name. A lot of times it could be passed down to somebody more junior, or it could be passed down to a graduate. It all depends on who you're hiring. Like I remember, when we were dealing with different agencies, we wanted to make sure that, okay, we're dealing with CBRE, but we want Darren Nugent on the property, or we're dealing with, Savills, we want Michael Healy as our agent. So you want to make sure that you pick the team to go with the assets, rather than just picking the agency and then just seeing who they get to work on it.
Yeah.
It's trying to work with people through it. But yeah, look, generally speaking, I think in terms of one of the big firms, it's just it's kind of the level of backup support that you have. Certainly research, but I found recently with, I suppose, the likes of podcasts, the likes of, the information is out there anyway. Like the bi-monthly reports are out there. Okay, you don't have the inside track. Like what happens, any bi-monthly report, Marie Hunt, who's excellent, would come to each department and she'd have the stats, and then she'd say, what's happening on the ground? What's happening next? And then she'd look at what's happening in London, what's happening in, like, I still look at Spencer Levy, and I look at, he's the head of research, kind of New York. I kind of see what's happening in Australia. I kind of listen to that podcast, and I try and see what's happening in the London market. So you're always trying to see the trends.
Absolutely, yeah.
Everybody's kind of looking at what's happening with offices. I'm looking at what's happening in Australia. So, you're seeing trends where there's flexible work time. You're coming into the office for culture, to move up the ladder. But that kind of synergy, that kind of, meeting outside a Zoom call, if it means, you might finish your Zoom call and then you're shooting the breeze with somebody and something else pops up, or you can just talk to somebody. It's you're not interrupting them. I think it'll come back, but it depends on what sector. Like the professional services sector, I'd see that probably coming back more so than the tech guys. Like what will happen with different tech staff is there's a bit of a war on talent.
Yeah.
They mightn't want to force them back too soon. They might kind of, the softly approach. But other firms in the kind of the service, the financial services sector are saying, right, come September, October, we'll start getting people back. And that's when you'll see where's the new office. Yeah, I think there'll be flexible time, depending on the position of the person that's there. But the younger graduates, they might be saying, look, we want you in the office 4 days a week. But you don't know. Older, it could be 3-2. It's a bit like a football formation. You don't know, you don't know what way it's working. But I can see Ireland probably sticking to the Monday to Friday. I can't see it kind of, like the States, they're kind of working at the weekends. It's a bit more like that. But I think it's the work-life balance. I think some people, you're nearly having to incentivize it for them to come back. So
yeah, I've seen that here in East Point. It's interesting to watch.
Yeah. No, East Point is great. Like in terms of you've got the good public transport, you've got your football pitches, you've got your community, your social media. You have that kind of US corporate feel to it, and it's a good alternative to city centre. And you feel as if you're outside the city, but you hop on a Dublin bike, you could be in the IFSC in 5 minutes.
I want to move on to development land, because you've put a number of opportunities my way in the last while, and I thank you for that, by the way.
No problem.
But,
we'll get there in the end, Gavin.
In terms of just, like when you're looking at sites, if say, for example, you're acquiring a site for a client.
Yeah.
I just thought it would be useful for you, given your experience now in this kind of whole area. What would you look for if you were going out to acquire a site? Like, what are the key things that you...
Well, zoning, services, and then development potential on the site. So a lot of times what I get involved in is I get involved with a planning consultant at early days. Look, I'm not a specialist. I kind of know roughly values and I know what can go on it, but I always go that bit further to expert opinion. So I'd use Hughes planning development consultants. I use John Spain. I'd use others to assess what can go on it. And then what you do is you nearly work off a conservative planning and use that as your base. And then the extra is the uplift, but I wouldn't count on it. I'd just be very careful to see what's the minimum planning that you can get, and the extra potential is the add-on. In terms of Irish Water, connectivity for services, development levies, some of the levies along the Lewis line, very high. And then it's just that you're always keeping an eye on the cost of construction. And you basically run what you call a development appraisal, and you have your model as to these are the costs of X, Y, and Z. So you kind of work with your planning consultant first and foremost, and then you work with a good QS like MMP or somebody else, or like there's plenty of them, or line site. You keep tabs on where the cost of construction is, because you're basically working out what's the potential rent. So if you're doing PRS, you're working off that, then you're working off your yields, and then it's the cost of that, your development value less your construction costs, and where you get your profit. So you want to be making minimum 15 to 20% profit on each turn.
Yeah, for sure. And in terms of things like, for example, public transport,
key.
Those are key, and proximity of the likes of schools or shops and convenience.
It's schools. Like it's schools, shops. It depends if it's house building. They'll be first and foremost. If it's apartment blocks, it's proximity to Lewis. I know you talk your QBC, your Lewis, and your train and your services, but now it's bike routes. Now it's go-car stations, Dublin bike routes, access time. It's more the travel time in and out of properties. I remember used it's KPMG now, but it would have been Future Analytics before. So when we were assessing where the best kind of build to rent locations or where the best co-living locations, we looked at a scientific approach as to areas that would achieve a certain rent, and it wasn't your top end rent. These are your rents of kind of slightly lower, €2,500, but you're on a good public transport link. So it was kind of showing out areas that you didn't think, kind of in towards Fitchburg, Cabra, Glasnevin, slightly secondary areas are Dublin 8 kind of, it was
the data that was showing you where to look rather than your own mindset kind of saying.
Well, it was the cost of acquiring the site, and then it was the transport links. Like you just look at the Lewis and the impact that it's having, or then you look at Metro North now and you look at Swords. Okay, the Lewis is there. You're clever in that you bought Rathbeg, which is on the Lewis extension line, which will link in with Bray. Excellent, good buy. The other angle is you go Metro North and you go in around Swords, and you're getting zoning, which is major town centre, and you're just tying in and you're trying to build off the back of that. Or if you're talking glass bottle site, you'll have a spin-off off there. These things will all happen, and the transport, the infrastructure is there. But it's all of those things are key. But even it could be down to areas that Harrow's Cross are slightly centric, but it's a flat run into town. If you're on a bike, you've cycleway all along the canal.
Fast and simple.
Yeah, exactly. So it's your access to public transport. But like you see it in areas like Dublin 8, you go back 5 years ago, it's the standard of the coffee shop. It would have been a greasy spoon. Now you've
decent ones, yeah.
Yeah, you've really, it's upgrading, and it's the areas are coming right, or
gentrification.
Yeah, gentrification. You look at Grand Canal Harbour, you look at Guinness Storehouse, You look at areas along there, you look at, in around by Teeling's Whiskey. Like there was areas in Cork Street I remember developing down there, and this is going back like 15 years ago, and we were struggling, bar little, we were struggling to rent the retail units around there.
Yeah. I remember that was a rough enough area.
It was a rough enough area, yeah. Like literally, you'd arrive on site and there'd be a party happening in behind the hoarding where guys had gone in and were drinking cans.
Having a little party, yeah.
Yeah, so, but areas like that, yeah.
Robert, I just wanted to go and ask you about, because you've got your commercial hat on as well. And I mean, the commercial market, specifically the retail kind of sector, because that was an area that I did very well in back in the kind of 2000s. But last week's podcast was with a guy from the UK.
I was listening to it, yeah.
About saving the high street. Like, what about the Irish high street? What is your view on the future of it, and what opportunities would you say are there for people?
I think the smaller units are holding up, and then the certain sectors that are very, like the suburbs are quite attractive now, but they tend to be smaller units. You'd be surprised. It's just a bigger box. Your 20, 30, 40,000 square foot retailers. Like I know he was talking about maybe finding a use for the first floor or splitting it, similar to CHQ building. It's trying to de-risk it. Some of the units are too large, but generally it's trying to bring in leisure. It's trying to bring in for different shopping centres. Say for instance the shopping centre, like a good example would be Blackrock Shopping Centre, Frascati. Where did they go? They upgrade it, and where do they add on? They built a block of apartments overhead. So straight away, the shopping centre has paid for itself with the development upwards. So by extending that upwards, I was doing a bit of work in Castle Troy Shopping Centre, and I kind of went down and I had a strategic review of it. And this is all pre-COVID, and this is how you add value. Do you go for an add-on to the site? What do you go for? You want to get your food, your hospitality. Okay, I know food and hospitality is
suffering.
Coming out of the tracks now, but you want to have, we put in, a farmer's market on Friday. You create a buzz about it. We have outside cinema. These things will all come back. If you look at Cherrywood are looking at Dundrum. What can we do to better Dundrum? Where will the market go? Do we, you talk about arbitrage where you split up units into smaller sizes. You give yourself different options there. Obviously you're still going to go for your anchor tenants. Lidl and Aldi are just going bigger and bigger. They want larger stores. Other retailers that are strong, like your supermarkets, your Decathlons, your discount rate retailers are all strong. Local convenience are going well. Tesco are ramping up. They're on the hunt again for space. It's what I have a concern about is your O'Connell Streets, your Henry Streets, parts of Grafton Street. There will be a rent drop, but for how long? You have to reimagine itself. Do you split up units? Do you have a quasi, or do you have a share? Is it a case where one unit is split up? Nearly like you go into your spa and you have an insomnia offering it within it.
Concessions kind of or something.
Yeah, it could be concessions or it could be people linking in. But yeah, it's the larger retailers. That's the larger retail units. That's where you'd have some concern. I think
I have to say, I drove down Capel Street on the weekend.
Yeah.
I'm absolutely amazed by the transformation since they put the outdoor dining.
Yeah,
it's fantastic. I mean, I was amazed because that used to be a really sort of poor street in terms of retail.
Yeah.
And suddenly, with all this outdoor dining stuff, it's transformed into something that I wouldn't mind actually stopping by.
There's a real buzz about it. I've just rented a unit. Okay, I rented at NCBI, National Council of Blind in Ireland. Okay, it's a charity, but it's a safe bet. But we went for cafe use, but the problem is there's no fire escape onto the back of the property. So for fire safety compliance, it doesn't work there. And then, there's other apartment blocks around there are very attractive. But if you look at Capel Street, it's the Brother Hubbard. They went into Rhodes D7 doing a bomb. Musashi Sushi doing a bomb. There's other different retailers go up, but it's a strange street. You could have charity shops, you could have Chinese restaurants, you could have sex shops. It's a strange one, but like the outside seating alone is huge.
I think that'll transform that. My view is that over time that street will gentrify now.
It'll become a Camden Street. Okay, yeah. I don't think it's going to be as leery as Camden Street, but it is. It's I think Panty Bar in around there is doing very, very, very well. Okay, they were shut for far too long, but just the placemaking. The only thing I'd like to see is, it's a bit mix and match. Maybe they could have got together a bit more and said, look, we'll have the same type of hoarding in around the seating areys.
Yeah. Well, give it time. That'll
give it time. But yeah, it all comes right. Apartments in around there. But if you look at it, you've got the Bullet Hotel, you've McGettigan's, you've Hampton by High. You've 4 hotels in around there. Your Stones Throw from Smithfield. It's all amalgamating. So if you look at Grafton Street, one side you have the corporates, which is your, let's say, your Marco Pierre Whites and your Ivy. That's the business market. And then the other side of Grafton Street, you have South William Street, where it's really buzzy. And that's where the young people want to hang out. Maybe a bit more disposable income. In terms of O'Connell Street, and to the left of that, Capel Street is taken off, whereas the far side, you're kind of getting more the FSC. So there's certain pinch points, and if you get your placemaking right there, lessen the cars, put in more, bike racks, get a bit of a buzz about it. It doesn't cost that much to support each other. I think if people work together, like different cafes, restaurants, and they try and upgrade it, it all comes right. And what will happen is it'll also become a nice place to live. So the residential rents will come up, because it's not your tier 1 rents. It's not like your IFSC. You're a bit more affordable. But I'm looking at a site there. Well, it's not really a site. It's an existing building, 114, 116 Capel Street. And I'm talking about, how do you de-risk it? We're looking at putting in a food offering in the ground floor basement, adding to the roof. So we're talking about going up maybe a floor and a half, and trying to increase the value of the property. So something like that. But even in around there, it'll become more attractive as these cafes come up. As the buzz is nice and people are sitting out for a glass of wine or whatever, people want to live there. They want to.
Yeah. No, it does really look.
It is good. Yeah.
The way I remember it. And
the only problem is trying to get parking spot now.
Yeah, it's impossible. Yeah. I was going to just ask, in terms of, you say you're advising a client, because one of the issues that I've seen now is that if you're taking, say a cafe offering or something like that, traditionally you went straight to the Starbucks or to the Insomnias and stuff, because you got the big corporate rental.
Yeah.
But now I'm seeing that it's the kind of artisan cafes, independents. They're all doing really, really well. And so, which one's better? Because I like the idea of a bustling sort of cafe, but the way it's valued because of the covenant versus the likes of the big corporate, you have to kind of question that. I wonder.
It's a hard one to work on. Like, there's certain areas that you're nearly better with an independent offering in Dalkey, because of the snob effect, or then if you're Camden Street or Capel Street, you're probably better off with like guys have really come on. 3FE, Coffee Angel, they've reset the mold, and now they're actually a very good covenant, because they've got a good brand name, or Coffee to Go. Like, these guys would have come up as independents, but it depends on the rent level. The larger coffee shops, 1,000 square foot in around there, fine for, your smaller independents, or 600-700 square foot. They're very hard to get, but that would be perfect for your independent. But the likes of a 3,000 square foot, the independents won't be able for it. Your rates are too high. That's where you have to go back into, the large shopping centres. You'll end up with a Costa or a Starbucks, because it's just simply too large. The smaller units, like on Capel Street, you can get 1,000 square foot. That could be a great coffee because it's sustainable. you want to be able to have that your turnover is 10 times the rental costs. So if you say it's going to cost me 40,000 all in or 50,000 all in, you have to have in mind, am I going to make 10 times that rent? And if you're confident enough to do it, it depends. Like, look, it starts off, what I do for guys that are looking at a tenancy and they're a bit untrusted, you take on a security deposit. Okay, say it's 3 months rent. That's manageable in the current market if they're going to fit it out. And then what you do is you test the profits test after 2 years. So if they're making 3 times their net profit, then you can see that they're actually viable. So then you can say, look, tell you what, guys, if you prove yourself after 2 or 3 years, we can give you your deposit back. And then, they're trading 3 years, you're happy with them, they've got a good following, and they trade on and they trade well.
Good advice.
The other side of it is look at areas where the seating has come in. Like I have a client of mine, and they were gifted 56 outside seats on South William Street recently. Their turnover is up 80%. Okay.
Wow.
Will that stay, or will DCC turn around in 2 years' time and say, if you want to keep the seats, you're going to have to pay X amount per square meter or per seat? Or you'd hope that it stays, but will there be charges coming in? I'd say for the next year, you'll have a free run, but you just don't know what's going to happen down the line.
Yeah.
When we get back to normal, in a year or two's time, will they try and cash in? But DCC are trying to work with most of another letting on Fenian Street of a pub, 26 Fenian Street, 1,800 square foot per floor. It's the third time renting it that the tenant has stayed there.
Wow.
Rental. Okay, it needs 300,000 fit out because it's shell and core stripped back. The first tenant, after 4 months of lockdown, lost patience with it. The second, I think the fit out costs were probably too high. If you're starting a new business and your fit out cost is 300,000,
you're on the back foot. Right?
You're on the back foot. So it took 3 times, and that's the worst case scenario because it's hospitality.
Yeah.
You're impacted on that. The bars and restaurants, there's probably some good value to be had in bars and restaurants. I just haven't seen it yet because people are being furloughed.
I've been watching it all right, yeah, and we've got our struggles here in East Point as well, but a number of the places have closed. We're coming towards the end of the talk, Robert. I just wanted to ask you 1 or 2 little final questions. First of all, with all of the clients that you've worked for, and you've worked for, you were telling me some of the bigger names and all of these highly successful people. Have you identified any traits or sort of behaviors that have, in your opinion, kind of contributed to their success over the years? Is there anything that kind of stands out in your mind?
It's probably trying to read the market and take a calculated risk, determination, and just a hunger for the deal. Like guys like Liam Carr were just passionate about doing a deal. Willie Dowling, passionate about getting a letting done. It's just a passion for building, getting the right tenant in, getting the right mix, and moving on. It's you have to have that grow for it. If you don't have that kind of hands-on approach, get stuck into it, assess the asset. Like there's guys there that wouldn't have been involved in the deal, and it's only that they rented the property. I remember Liam went into Co restaurant once, and the guys were asking him, you're not really our demographic. You're older, you're with your family, and how did you hear about us? And he said, I've been hearing about you long enough. I'm your landlord.
Unbelievable, yeah.
Yeah, so it's under the radar stuff, but it's amazing, really.
Tell me this final question: advice for your 20-year-old self now, looking back in your career.
Don't be afraid to get outside your comfort zone. Look to always improve and try and get the experience. Try valuations, try agency. Step outside your comfort zone and kind of find your niche where you like and invest your time in that. And put some money aside while you're along the way. So the development, try and de-risk it, or try and secure it, or even, move on. But just structured in a way that if something wrong happens, that you're not, it's not like a deck of cards, and don't take on a personal guarantee. That's one thing that I'd never do.
Yeah, good advice. All right, Robert, thanks so much for your time. Just if anyone would like to reach out and connect with you or contact you, what's the best way to do that?
Best way is robertcolleran.com. That's Colleran, robertcolleran.com, or I'm on LinkedIn or Twitter. So social.
I'll put the links in the show notes.
Yeah, no, appreciate that, Gavin. Yeah.
All right, Robert, thanks so much for your time, and
thanks very much.
Good luck, and look forward to catching up with you over a coffee or a beer or something like that.
Yeah, brilliant. Thanks.
All right, guys, I hope you enjoyed this week's episode of Behind the Facade. Thank you so much for listening. As always, my number one ask is for you to leave a review or indeed share out this podcast with anyone you think would benefit from it. In the show notes, you will find links to the various things we discussed today. If you have any questions or topics you would like me to cover in future episodes, please connect with me via the Facebook group Behind the Facade Community. Alternatively, you can find me on social media using my handle Gavin J. Gallagher, and this includes, of course, my YouTube channel. Lastly, you can stay up to date with all the various things I'm working on by adding your name to my email list over at www.gavinjgallagher.com/go. And in particular, you may be interested to learn about my mastermind, which is now live. It's called the Elite Property Accelerator, and I've welcomed in the first couple of members. So if you are interested in that, you will definitely find more information over in the website and sign up to the email list in order to do that. All right, folks, that's all for now. I hope you have a great week, and I will see you again next week.